Good morning, everyone. Tom Moffat here. So I wanted to go through step one of your personal financial plan. In step one, you're actually going to be creating three documents: a balance sheet, a personal cash flow statement, which is also known as an income statement, and a personal budget. So let's take a look at those three documents. Scoot this over just a little bit so you can see it better. The first sheet you see here is financial documents and records. This is not required, but it's a good idea to identify where the important financial documents and records that you have are located. Sometimes, since you don't use these on a regular basis, sometimes we forget where they're at. And when we really need them, then this is a record where we can go to find these documents and records. So the first financial statement you'll complete is the personal balance sheet. The balance sheet is simply a record of what you have financial interest or financial control over, as well as your liabilities, things that you owe, in order to determine your net worth. So if you look at the balance sheet, one of the things to keep in mind about a balance sheet, a balance sheet is for a point in time, meaning in this example, as of July 31st, what is our financial value of of those assets that we control, our liabilities, and our net worth. For example, assets, liquid assets, which are things that are easily convertible to cash. In our example, we have a checking account balance, we have some money market accounts, maybe some savings of 5250. We have a life insurance that has a cash value of 3700. Maybe we have $100 on hand, so our liquid assets are 10,500. Household assets and possessions, you can see current market value of home, market value of the automobiles that we own, our furniture. Maybe we have some stereo and video and camera equipment that's worth $4,000. We have some antiques. We have a boat that has an $1,100 value. And so our total household assets would be $211,300. Let's look at our investment assets. Again, things that we have financial control over. Let's say we have a savings certificate for $500. We don't really have any stocks and bonds at this point. We have an IRA, maybe through our employer, that has a $5,000 value. We have some mutual funds that we've invested in for $12,000. So our total investment assets are $17,500. And these total assets then become $239,300 total assets. So that's what items that we have financial control over. Let's look at liabilities. What do we owe? We have a charge account and credit card balances, maybe $3,300. We have an auto loan balance of $1,800. We owe $1,800 on our car. So our current liabilities are $5,100. Long-term liabilities. The difference between current and long-term is usually identified as something that has a time frame of more than 12 months. A current liability is something that has a time frame of less than 12 months. So our long-term liabilities are mortgage. We owe $175,000 on our house. We have a $1,200 student loan that we have to pay off over time. So we have current total long-term liabilities of $176,200. So our total liabilities would be, in this example, $181,300. So if we look at our total assets, $239,300, and we subtract our total liabilities, $181,300, we have a positive net worth of $58,000. Now what that means is if we were to liquidate all of our assets, every asset that we have, and pay off all the liabilities that we have, we'd have $58,000 left over. Well, that's usually not likely going to happen, but this just gives you a snapshot view of your net worth at a point in time. So let's look at the next statement, the personal cash flow statement. The cash flow statement, or income and expense statement, sometimes it's known as income and expense statement, is, get to that, here we go, cash flow statement for the month ending July 31st. That is for a period of time, 1 month, 1 quarter, maybe semi-annually, 1 year, usually on a monthly basis. So for the month of July that ends on July 31st, what did we take in income and what did we spend? So if you look at the cash inflows, we had a salary, 1,700. We had some miscellaneous income of 100. Maybe we have some interest on our savings account of $50. So our total income for the month of July was $18,500. We look further down. Now we're going to look at how did we spend our money in July. We paid $800 in mortgage, or could be rent. We had a loan payment that we had to pay, $200. We paid that. So we had fixed outflows of $1,000. Now, fixed outflows are typically expenses that don't change very often. That's why they're called fixed. So they're pretty stationary over time. It's not that they couldn't change, but they just don't change every month. If we look at variable expenses, these are items that would change from month to month, perhaps. Maybe not a great deal, but at least some. Food, we spent $250 on food. We had $50 we spent on clothes. We had $50 we spent on electricity. Here's another expense, telephone, another expense, water. We spent $20 on education, $25 on personal care. We have medical expenses, recreation or entertainment. We had some gifts that we bought, and then we had donations maybe of $120. And so our total variable outflows, how much money did we spend? 710. Okay, so if we take our fixed outflows, our fixed expenses, and our variable outflows, variable expenses, we had total outflows are 1710, meaning we spent $1,710 in the month of July. We look up here at our income, 1850. We subtract our expenses, our outflows of 1710. So we had $140 surplus in the month of July. Okay, so if we have $140 surplus, the next thing for us to look at is how did we spend that surplus of $140? What did we do with it? Let's say we're building up our emergency fund, so we put $100 in our emergency fund of the 140, and I'll have more to say about emergency funds in just a minute. And we had a financial goal savings. We put $40 in our savings. So that's how we spent this $140 surplus, $140. And that's our cash flow. Those are actual income, actual expenses for the month of July, ending on July 31st. So let's take a look now at our personal budget. Our personal budget actually is our plan from how we are going to control our financial income and expenses. Let's take a look here. You're interested in the financial or the budgeted amounts column here. You can use the actual amounts column if you'd like. As you have income and expenses, you can use that. But the one we're most interested in right now is what's our plan for income and expenses. Salary, $1,800. That's what our salary is going to be every month. And maybe on a regular basis, we have $50 of other income somehow. So we have a total income from month to month of $1,850. That's our plan. If we look down, okay, how are we going to allocate different expenses on our budget? We're going to have mortgage or rent, 800, loan payment of 200. So that's fixed expenses, which is also going to come from our cash flow statement. We know what that is. And let's say that our surplus from our cash flow statement is pretty constant. So we can budget total savings $140, $100 to the emergency fund, and $40 for our financial goal savings. So we put $40 in our savings account. Emergency fund is that fund that you are developing or you're building in case you have an unknown emergency. You have some money set aside in order to take care of that. So that's what an emergency fund is. Let's look down to variable expenses. Same thing as variable outflows. Let's say we're going to budget $250 for food, $175 for utilities, $50 a month for clothes. This is our plan. We're going to spend $25 on personal care, maybe $50 a month on medical and health. We have some entertainment that we're budgeting. Education, we're going to budget $20 for education. And we're going to plan to spend $130 on gifts and donations. Okay, so our total variable expenses, it might change from month to month in our cash flow statement, but not so much on our budget. Our budget is going to be 710 for that group of expenses known as variable. So our total expenses on our budget is going to be $1,850. So if you look back up at your total income, we have accounted for our total income. This is our plan. We plan to make 1850. We plan to spend 1850. So if you add fixed expenses, total savings, total variable expenses, add those all together, then that's where you get your 1850 total expenses. This number on a budget total expenses should be the same as total income because that's your plan. When you look at your cash flow statement, these amounts may change from month to month, and if they change any significant amount, then you'll want to take a look at your personal budget and see if maybe some of those budgeted items need to change. For example, let's say, for example, you get a raise, then your salary would change. If you buy a new home, your rent or your mortgage would change. If you take on another loan or you pay off a loan, then your loan payment would change on your budget. Looking down through here, let's say it's December and you have a little extra expenses for your food. It would change on your cash flow statement because you spent more, but that's a one-time item, so it might not change your budget. So again, keep in mind cash flow, actual income, actual expenses. Budget is what's your plan. What do you plan to have as income and what do you plan to have as expenses? And that's how you complete that step one of your personal financial plan. If you have any questions about how to complete these documents, please let me know.